Mixing biotechnology and investment is a new dimension, with gains of 400% in 2 days or losses of 58% in a single afternoon. Would you like to learn some of the keys that drive this market? Stay tuned as we start the taxi. During these special days, we are kicking off in a very special place. My best wishes to all of you, and may this man in red bring you great biotech stocks. If you want me to visit your city, let me know in the comments. Welcome to Taxi Biotech, a show to explore news and updates from the world of biotechnology and understand its impact on the stock market. The stock data I present here reflects the performance of companies or the clinical trials and does not constitute any investment recommendation. This is pure entertainment. Let's begin our usual review of the best biotech stocks of the week. We'll see the key factors behind their gains, and at the end I'll summarize the lesson learned and the knowledge we've built in previous videos. The top 3 biotech stocks of the week were TONIX Pharmaceuticals with 159% increase, Portage and Bio-Path with nearly 100% gains. Now let's dive into Portage Biotech, which skyrocketed 300% in a single day, only to drop 100% by the end of the week. Let's see what happened. Portage is a company that had solvency issues, and suddenly they issued a statement about planning to sell a family of their drugs. These drugs belongs to a Portage subsidiary. As you can see on the screen, they include some phase 2 and phase 1 drugs in collaboration with Merck. Back in July 2022, Portage, which already had a stake in IOX, the subsidiary, bought the remaining 22%, paying around 150 million in shares and cash. I've done the math, but feel free to double check it, please. If we consider that they paid 150 million for 22%, they would now need to buy out Portage for a higher amount. It's complicated because Portage is in very poor financial shape and they need cash. However, the asset is now in more advanced phases and should be worth more. Portage market cap is very low. It's ridiculous, just 6 million. Potential acquisition, it would be a massive deal. However, the negotiations are at very early stage and may not reach an agreement. Since Immunova is private, I don't know their financial capacity to complete this transaction. If you have more info, leave it in the comments. Now let's talk about TONIX Pharmaceuticals. Here, technical analysis won't help so much. What really matters is staying alert to fundamentals, biotech news, and understanding how stock reacts to certain announcements. This is what I want to explain in these videos. In this case, there was a price explosion because the company received FDA acceptance to review their drug for fibromyalgia. This news means that within 74 days, the company will receive a date to decide whether the drug will be approved for market or not. Obviously, a new drug approval would have a massive impact on the company's stock price. However, the headline was slightly misleading because, upon closer reading, it was clear that you have to wait around 74 days, maybe less, just to get the final decision date, which could be another 6 months down the line. That's why there was an initial spike in the stock price, followed by a drop. These are the things that you need to consider in this market. As always, let's take a look at the numbers. TONIX has around 30 million in cash, but they spend over 100 million annually. Clearly, they need more funding. And, as is common in biotech stocks, they announced a capital raise following the good news, issuing 150 million additional shares. To predict what the company might do next, let's look at the past behavior. On December 2023, they presented positive data for the same drug they are now submitting to the FDA. On the same day, they announced a stock offering. Looking at the chart, the stock dropped 43% immediately. Investors dislike dilution following positive news, but it's a survival tactic for these companies. Continuing, on March of this year, the company received a rare pediatric disease designation, and 3 days later, another small stock offering, and again, a drop in the stock price. It's also worth mentioning Nasdaq listing requirements. Companies must remain a stock price at least $1 to remain listed at Nasdaq. I draw this blue line here to reflect this critical level. So looking back, when the stock price failed to meet this minimum, they, TONIX, execute a reverse stock split, consolidating 3 shares into one. While the total value of the share remained the same, the price per share increased due to the consolidation. Shortly after that, after staying above $1 for 10 consecutive days, the company secured their Nasdaq listing. Can you guess what happened next? Of course, they announced another stock offering, causing the stock price to drop below $1 again. So, given this history, what can we expect now? We know they need cash. We know they've issued 150 million more shares to potentially dump on the market. We know their past behavior, and we know that within the period of 74 days, they might announce a date for FDA approval. If they release additional positive news, the stock could climb back to $1. Alternatively, they might opt for another reverse split to satisfy the Nasdaq requirements. As they've done before, be very cautious once the stock stays above $1 for 10 consecutive days. Also be very careful about shorting. Biotech stocks are prone to short squeeze after any minor or unexpected news. Like the one mentioned earlier, you will need to set your stop very carefully. This is for professionals only. And let's finish with Bio-Path. This is a graph in 30 minutes time period to see the aftermarket and the pre-market and then the regular market. It jumped 353% in pre-market, but dropped 60% once the market opened. Clearly, who bought during the pre-market made a mistake. The news that triggered the overreaction, highlighted in yellow. I'm not sure, but maybe an algorithm was fooled by the headline, which mentioned type 2 diabetes, patient, increased insulin sensitivity. A poorly trained model might interpret this incorrectly. But if you open the article, you'll see it clearly states that this is a preclinical research, meaning the experiments are still being made on animals, and it will take some time, 6 months, 1 year or more, before reaching human trials. Preclinical news like this are usually neutral or even negative. Look at what happened. The company released the news, which was neutral, and the market overreacted. In these cases, there is often a high probability of a correction, which could be an opportunity to capitalize. Not now, of course, but this is the lesson for trading in similar situations. Remember, this is biotech, a market where meteoric rises can happen, so always take precautions. And an extra ball, in previous videos I mentioned that it looked like Molecular Templates would be delisted from Nasdaq. This week it was officially confirmed, with the stock dropping 58%. And finally, the learnings from the best Biotech stocks of this week, highlighted in yellow. You know, the stock offering could be at any moment. Hints of a buyout increase the price dramatically. The last one, overreaction, could happen with neutral news. Be very careful. We'll turn off the taximeter under the northern lights. See you next time.